As expected, the Federal Reserve kept their funds rate unchanged and released their summary of economic projections today. In this video, we'll look at some of the major takeaways from today's press conference. We'll see what is happening with inflation and when we can expect that first rate cut. Fed Chair Jerome Powell gave a statement after the March FOMC meeting, and as expected, the Fed kept their policy rate unchanged. Inflation has eased since the Fed started raising rates, but it still remains high. If you look at last week's inflation reports, the CPI, the Consumer Price Index, and its wholesale counterpart, the PPI, the Producer Price Index, both of those numbers came in hotter than expected. Looking at CPI, both headline and core CPI rose 0.4% from January to February. Annually, the CPI actually rose from 3.1% to 3.2% year over year in February, which was higher than expected. Core CPI, which strips out the volatile food and energy prices, fell from 3.9% to 3.8% year over year, which was also higher than estimated. So even though these numbers came in higher than expected, the Fed mainly looks at the PCE inflation data, and the next report is expected to be released on March 29th. As always, Chair Powell was careful to not give a clear indication of when they would begin to cut rates, and stated that the path forward is uncertain. This is what he said in his opening statement. "We believe that our policy rate is likely at its peak for this tightening cycle, and that if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer if appropriate." So what this means is that the Fed could keep the rate where it's at for longer, depending on inflation and economic data over the next couple of months. The Fed also released their summary of economic projections, which, as the name suggests, is a quarterly estimate on where the FOMC participants, the Federal Reserve board members, and the bank presidents think the economy is headed. This includes their projections on the federal funds rate, GDP, inflation, and unemployment rates. If you take a look at the median projections, you can see that the median Fed funds rate is estimated to be 4.6% by the end of this year, which hasn't changed from their December projection. So this means that the Fed is still expecting to cut rates 3 times this year. However, the projected median rates for year-end 2025, year-end 2026, and in the long run are higher than what was estimated in December last year. To get a visual understanding of this, let's look at the dot plot that was released today compared to the dot plot from December 2023. The dot plot is basically assessments of the FOMC participants, with each dot representing the projection of an individual participant of the midpoint of the target range of the Fed funds rate. As you can see, these projections have moved up a little, but it's interesting to note that more participants seem to agree on these median numbers than before. So when is this rate cut expected to happen? Chair Powell reiterated over and over that the Fed is looking for greater confidence that inflation is moving sustainably down toward 2%. Most experts predict that the likelihood of a rate cut in the May meeting is really low. According to the CME Fed Watch tool, the probability of the first rate cut being at the June meeting has gone up from 55.5% yesterday to 70.8% after today's meeting. So the risks are two-sided. If the Fed eases rates too soon, we could see a reversal on the progress on inflation, which would force them to go back to tightening. But if the Fed eases rates too late, we could see a weakening in the economy and the labor market. Bottom line, we're still looking at the first rate cut being in June or July. However, the mortgage markets have already adjusted a little favorably in light of today's press conference. If you are considering buying a home, it is important that you have a game plan in place. Don't wait till the interest rates come down before you even start the pre-approval process. If you have any questions about this or anything mortgage or real estate related, feel free to reach out to me. Also, like this video and subscribe to this channel to be notified of other educational content. Also, share this video with someone you know that might benefit from this data. Thanks for watching. Have a great day.